Good afternoon, everyone, and thank you very much for joining us today. Ivan, are you there? Can you hear me? And can I do a sound check as well? If someone can just say yes, they can hear us.
Well, if I can hear you and you can hear me, since we're in this whole remote thing happening, I think we're probably okay. The whole sound checking is going to be a lot easier, isn't it?
All right, okay. Well, we got a few yeses as well. So thank you for those confirmations. All right, now let's just go through the housekeeping contained in this presentation is general, doesn't take into consideration. Hey?
I was just going to say, Patrick Satori, sound is good. Welcome to the team, mate. Good to have you on board.
Yes, new team member. I'll introduce him in a moment. But any advice contained in this presentation, general only, doesn't take into consideration your personal circumstances. You need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns. And options, if you don't know what you're doing, options are very risky. All right. So for those of you that have joined this session for the first time, we did invite people from the session we ran last night, and we've had an enormous amount of people joining and opening accounts with us, unprecedented amount of people joining and opening accounts with us over the last 3 weeks. For those of you that are new, welcome. All right. And so in this session, it's Ivan and I talking about, if there are trades that are coming in our scanners, we'll talk about our own trades and definitely welcome questions and people putting forward trades that they're doing themselves. So thanks and welcome. All right, now let's open up the market. So if you're not currently using our technology, this is our platform, and you want to use it, just tell us to say yes or something like that. We'll get you set up on a trial. But anyway, so the market today, why don't we open up the XJO? It's come right off. It was up this morning. I don't know about you, Ivan. I'm not really a believer. I think that we've been jawboned up a bit by that stimulus package. I just don't know that we needed a relief. It needed to bottom out, I guess, at some point in time. But I'm not really sure. I'm not a massive believer. I'm not saying though that we couldn't have spikes up. I think I don't know. Maybe 4,500 is a level to consolidate at, but it's all kind of to be seen for me at the moment. Personally,
so
I tried to get a... Yeah?
Go on, sorry. No, go.
I was going to say, personally, the way I've been wanting to trade this is not too far off. Nathan, if you're on the line last night, Nathan Germain spoke, who runs a fund and is also just a private trader. He spoke really well, very interesting, and that session was recorded if anyone wants to get on there and have a listen to Nathan. Aside from Ivan and I talking over each other constantly, it was a good session.
Sounds like every other session.
Yeah, and but I think my view at the moment is that the market is, I'm trying to catch the bear calls and bull puts, and I'm just like at the moment really not staying in trade too long. Like I'm happy to see a couple of days time decay, sort of depending. I'm more likely to go quite short and a lower delta on the bull put side when vol's really high because I can get the vol out of the trade. On the upside, I think the market is trending down, and I probably go a little bit further out in time, but probably go a bit closer and look for a bit more delta on the move. That's probably where I'm sitting at the moment. Probably the challenge is just this has been personally for me probably the busiest 3 weeks of my life working career, and I've had some pretty busy times. But just with everything that's going on, trying to move our operation so we can continue to do what we do across all 3 businesses that I run in remote, in sort of to be able to work remotely has been a challenge. And then also, like everyone else, we're trying to pivot. We're trying to, not reinvent, but make sure that we're working on the things that, add a lot of value in this market and change things up a bit. So it's been, I'm not making excuses, it's just been a bit more of a challenge to manage trades. It's probably more time at the moment to get your fill than what it normally would be, just trying to work out pricing and being patient for market makers and being reactive as well. Anyway, there you go. That's my little bit on things. Ivan, yourself?
Mate, that's a really sad story. I'm tearing up listening to that. You and your hard work. Yeah, I mean,
I'm having a lot of fun at the moment. I do enjoy the rough and tumble. It's obviously just depressing what's going on just in society, what's happening to the world at the moment. It's just bloody surreal. But anyway.
Yeah, I mean, it is definitely. I think it's partially why we're getting such high numbers because we tend to have a laugh about everything. But anyway, interestingly enough, my view on this is I am really watching today. I think today is going to be a very interesting day. I don't have anything on at the moment, but one thing that we were chatting about last night is Nathan and Patrick both agreed that they're both sort of short now type thing. Nathan was looking at sort of 5,500, 5,600 spreads. His trading style, so his fund is 100% options. He's been running it for about 5 years. It's a very small fund, super private investors on it. And he's been, I think he was our third or fourth client on the platform when we started, so he's been with us forever. And always asking us for more limits. But anyway, but where I don't agree is I think that having traded through the GFC a lot, I've seen these spikes be, this volatility and this choppiness and this whipsaw action be quite brutal, where you can be on the wrong side or the right side and still get stopped out. So I think that what's really important about today is, market obviously had a pop. Now it's selling off, so I think as this market is going right now, it's looking like Nathan and Patrick have the right idea. What I'm afraid of is a massive short squeeze. I think that there's some serious built-up shorts in the market over this time, and so I think that what we'll find is they'll have to unwind at some point in time, and typically they're all trend traders, so they'll be short until ASIC comes out and puts a ban in place for their particular assets, and then suddenly they can create this massive spike. So I'm worried for that. So I wouldn't be jumping onto any trades anytime soon personally. Just watching just to see what happens. I think the things that are interesting about today in particular, CBA coming off again, towards that sub 60, which obviously has been a point of gravitation. There's a couple of others off. I don't know, maybe I've actually lost my internet on my computer. Pat, if you can just bring up maybe the market map. I think today is a good day to look at a market map, and I think that it looks like there's weakness in the banks, and that in itself is probably starting to be, that's a little bit scary. So yeah, banks are down across the sector. Materials are really choppy. So those kind of things are good for things like iron condos, seeing that kind of weakness. But I want to see some follow through. I want to see some confirmation, because if we go on and take out the low, we're going for another drop. It's and it's going to be brutal because a lot of these people that have come in and bought stuff, will need to unwind. And the same is on the other side. So I think that for me personally, there's just not enough information to go off right now. And whatever's going to happen in the near term, I think patience right now in the market will pay dividends.
Yeah. I think I kind of agree with you. I'm probably more inclined to do a trade at the moment than you are, obviously. But I would still want.
You've always been.
But I'm seeing that a 53 kind of level. Do I expect it to be below there over the next 2 or 3 weeks? Yeah, I absolutely do it. So I'd be okay taking that bet, even if there is that squeeze that Ivan mentioned occurs. I don't know, but what do you think? I mean, how sustained in a downtrend market can that be from a time perspective, and what sort of can the quantum of the move be? would your thoughts be, Ivan?
Sorry, I just dropped out there for a second for me. Sorry, what was the first part? The quantum of which move? To the upside or the downside?
That sort of the squeeze is on, then how sustained could the move up be, or how long a period do you think that might be? We'd be talking about if in fact that's all it is, and what sort of the quantum of the move? Is it like a 1,000-point move from here, or is it
Yeah. I think we can. I think that if there's a real, I mean, because what you'd have, so yeah, and short answer to that question is yeah. I think it could go up to as high as 6,000, and I think that the move there could be just driven off short-term squeezing. So the shorts have to buy back their positions. Dumb money follows. Pushes prices up. People think that it's over. There's news in the market that potentially can go in and back some of that up because people, the expression you always make, which is about the hammer and the finding the things. Anyway, everyone knows what I'm talking about. But I think that a lot of people are in the market looking for a long position and information to back it up because they see it as the market is a lot cheaper. And I think that there's a lot of potential for a lot of money to come flying in. In terms of the speed of it, it can take, it could be sub a week. It can be really brutal. And then you have an even faster drop lower when whoever was selling the insto money, whoever was pushing the prices down, will just start unraveling again. And so I think that there's a lot of people that are sitting there looking for, that flattening of the curve, which we're now seeing in a couple of countries. Any kind of positive news about coronavirus, about slowing down of deaths or whatever else, and and positive news about self-isolation and potentially US reopening its economy in a couple of weeks being a major factor. But ultimately, yeah, there's a lot of cases and a lot of things happening on the other side as well, which are pretty negative.
I guess I don't know how to interpret news and into the market over a shorter period of time. So I think that there's jawboning going on by the governments, but it doesn't take much for some report to come out to say, oh no, it's going to be delayed by 2 weeks. That happens overnight. Things fall away. I don't know. I think it interesting, but probably the more interesting point would be the short-term squeeze, the short squeeze. Do you want to, Trudy's just asked, can you please explain that in a bit more detail? Do you want to do that?
The short squeeze? Yeah. So there's a bunch of, so if you think about sort of the market makeup, there's typically institutional investors like super funds and other people that manage funds and et cetera. Then you have the retail traders, which are the two most common kind of groups, and that's retail traders. I'd probably put self-managed super funds under that as well, and just mum and dad investors, as we like to call them. And then there is a whole group of day traders, swing traders, and people that are sort of the fallen reminiscences of the floor traders, floor operators, and they are so they used to be called locals for that reason, and they effectively act as liquidity providers in many ways. So they'll be sitting on the bid and offer a lot. They'll trade hundreds, if not more, times a day. And I've had experience across all the different paradigms, from sort of day trading, derivatives, and being one of those liquidity providers to ultimately being an insto broker and swing trading initially when I started and went back to. But anyway, if you operate through a big broker, you do have the capability to go in and short the market, and shorting the market just means that you've got to go to your broker, get what's called the borrow. So you borrow the stock from the broker, and the broker will either do it themselves or through another counterparty, and then they'll have the opportunity to sell or short sell the underlying stock. And short selling the stock literally just means that what you agree on is whatever that difference in price is, you're effectively selling it, and then you have to buy it back later. So what you'll see in typical downturns is you get a massive spike in short selling. So which is why if you for those of you that remember the GFC, there was at one point in time towards the end of the bottom, or very close to the bottom, there was actually a global ban on short selling for a very long period of time, and so you could no longer do that. You could no longer borrow the tick, and there were some rules that initially restricted and then completely banned it. And if there's no one short selling, you don't have that built-up pressure of that selling pressure into the market. So what ultimately happens is, there's a lot less liquidity on the downside, that offers sort of free up. But because of the nature of how these guys trade, right? If you think about it, if you buy some stock, let's say you buy some Afterpay at $17 or whatever it is right now, the worst you can go is zero. Whereas if you borrow Afterpay to go on and short sell it, the worst it can go is to the moon. And so as a result, it's just effectively like margin. You get risk properly, and your positions get very, very closely monitored. So as soon as the market moves, they typically have predefined stops, and as soon as that stop gets busted, they're effectively buying, and they're buying into whatever the situation is, and typically they're just driving the price up. The most famous example of this is probably, if you want to look back in history, is Volkswagen. And Volkswagen very briefly became the most, was Porsche, I think it was Volkswagen. Volkswagen became the most wealthy, most highly valued company for about an hour, and it blew up a fund. So one fund was getting super short, and they got stopped. They had to buy everything back on stop, driving the price up. Ridiculous. I think it was up 20% or something on that day, and if not more. And it was the most bizarre thing ever, and massive like $100, $200 billion fund, if I remember my numbers correctly. This was ages ago, but blew up anyway. So that's sort of the real impact of short squeezes. In Australia, it's not so prevalent as it is in US. There's a lot more. There's a lot more capability to get that borrower and to short the market, which means that kind of move will probably happen more overnight than it will happen during the day. But there's lots of movements. In today's world, Tesla is probably the most commonly shorted stock in the market, and the ASX actually, ASIC has mandated the ASX to release a daily report of all the short selling activity built up in the market. Now that I say that, I don't really know where to get it, but I think your broker may have access to it, and I think it actually might be available on the ASIC website if I'm not mistaken. Maybe it's on the ASIC. If anyone's interested in that, how's that for a long
explanation? So Ivan, thank you. And if I was to hold your view that this might happen, are you comfortable? 4,500 is just too far away, but if we saw a sell-off today and you were getting close to sort of 4,700, would you be looking at starting to look at a bull put out of the money? How do you trade your view?
Good question. I honestly don't know how to answer that right now, and I'll say that because I just don't know what the market's going to do over the course of today. So I think that if the market,
another way would be, I haven't priced any of it up, would be to look at a trade which can benefit from a big move up, and any move's going to be significant, so a decent move down. But the level that we're sitting at the moment, we'd expect movement to occur. Vol's probably going to make that trade interesting.
Yeah.
But if there's a short squeeze and the market runs up 500, 700 points from here, are you expecting volatility to come off?
Yeah, I probably would. Not for any other reason that, again, there's just going to be a lot of interest on the long side. So it's an interesting question, actually, because I think that you almost want to do a bit of a hybrid. You could do something with some low strike XJOs, so like whatever the lowest is at the moment, something that's deep in the money,
Yeah.
I don't have access to literally my internet fried on my computer, so I need to restart it. So I can't get access to it. But even maybe a 1 point LiPo type XJO would be your long, and then you actually buy a put to the downside with maybe even with a sold put below it, and that way, if the market rallies up and the vol drops off, you'll make money on that LiPo, and then if it drops off, then you make money on your spread with a vol spike. So potentially it's actually probably even do a bear put spread. Just thinking about this, it would be a bear put spread, which would not have margin associated with it. You're going to pay up a little bit more. So anyway, I'm not sure. But the reason why I wouldn't put anything on just today is just to have a look as to how it settles. I think that the steam seems to be coming out of the market now. If there's not some late night buying coming into the close, I think then, and especially if we close lower, that'll send a real signal to me that this is all, the buying is short term, it's unsophisticated, there's no real pressure behind it. And I'd actually be much more comfortable if we were to have that kind of move getting into a short position, and probably I just wait to see what tomorrow brings. I think that I'm a lot more comfortable right now with what's happening, especially since they're open, to be on the short side than the long side. I think that I'd wanted to go and retest the lows and volume to dry up a little bit on at the lows before I get into a bull put. I just missed out on my bull put on the close the other day, which was really annoying. Should have really paid up. We're talking about that the other day, and my problem is, and this is where I'm jaded, is I missed that trade, and the worst thing you can ever do is just try and start making your decisions based on that trade. And so I'm just trying to make sure that I isolate myself completely, pardon the pun, of the current situation, but self-isolate myself from this and just make my judgments based on where the move is. So I think that it's an interesting time in the sense that, I'd rather just go in much heavier when the market kind of drops maybe through the 50, through the low, and then maybe just kind of stops, and I'd be much more comfortable putting on a bull put there somewhere, sort of at that 4,500, 4,400 level maybe, and then, but I think regardless of the reason why I don't want to sort of think about over-engineering it is, I'd love to see what today brings. Tomorrow, the overnight session will be interesting as well to see if that US steam dries off. Stimulus packages have had an extensive period of, like, strong stimulus packages have bought, traditionally have bought months of buying activity in the past, which I don't necessarily think it's going to have the same impact now. But I just want to make sure that steam starts drying up a little bit, and then once that happens, then I'd actually, let's put it this way, I'd be much more comfortable getting into a bear put, into a bear call position if we were 200 points lower than here.
Yeah. Okay. Cool. Now, Richard had said his screen was frozen. I'm not sure if it changed to this chart, Richard. I did leave the chart of the the strategy builder up for quite some time. Who's asked that question? Geraldine. Geraldine's asked a question. What price do you think is a great entry point for APT? I've got an answer, which is which is but haven't you got the insight?
I'll refrain from comment. Every time I say that, I can't stop myself.
Yeah, the problem with Afterpay and other businesses is that what is the impact on their business? Bad debts, the fact that retail's shut down everywhere, and we don't know how long that's for. That's the challenging factor, is that your technicals are not really going to be a basis for trading it while there's information that's likely to continue to flow in. So Geraldine said, come on, be brave. I think the person that will be brave, Geraldine, will be the person that does the trade. We can say, we can make throwaway quips on it. But look, obviously, just because it's gone down doesn't mean it's going to come back up at this point in time. I don't know. And I probably think the people that would be qualified at this point in time to make a trade like that would be people that actually did have some awareness of how things were playing out for the business, just given that it's been driven down by, events based on the company, but also systemic issues worldwide that have had an impact. So I don't know. Don't know how to trade it. Doesn't meet any of our technical rules. So yeah, I don't know.
The point that I'll make is, I think I was just going to say that, yeah, I mean, so in terms of, I think that the point that you made about technicals is, well, actually technically, yeah, I think, again, you'd be much more comfortable on the short side with Afterpay than the long side. And I think that the important thing there is what we're about to see in the corporate markets is businesses, and I don't know enough about Afterpay, so this could be completely ignorant, but as far as I understand, it is a loss-making business, isn't it, prior to, or is it profitable? My understanding is it's loss-making, and if that's true, then a lot of these businesses are going to have a lot of downward pressure. I think capital markets are probably going to dry up. It's going to be a lot of value in going into companies that are strong, solid businesses that are making money. And I think that, I don't know, would you agree with that, Patrick? I think it's just a lot less interest in fintech story, or will be a lot less interested in sort of a fintech tech story than probably a month and 2 months ago.
Yeah, I would agree. Look, yes, for a period, being in a technology business, I guess what, the challenge is that hump getting over your loss-making activities to build everything and set yourself up in the appropriate way, and the market will be unkind to those businesses for a period. There's no doubt. The question about top 3 stocks, Geraldine's asked, unless something's changed, I imagine, Ivan, you're still in the same position. We're both in cash. I've got a few small cap listed. Yeah, are you?
No, so I still have mine that I was holding, which is the ones that I bought a couple of weeks ago into my self-managed super, which was, again, the first, Geraldine, first time I've done that since 2009. But I'm still holding on to Hutchison, HTA. I've still got, and HTA, just because they've went through a takeover with they're doing a merger with TPG, and I've had it for years. Ultimately, I'd be looking to get out of that, but I think it's got a bit of upside. There is Santos. Just that is my oil exposure. I oil oil's been slammed, and as a result, when oil's bounced a little bit, Santos has done really well. So I'm in on that. I'm in Westpac. When I got in, it was just the most. It wasn't the hardest hit, but it wasn't hit as much as CBA was, and so that was the reasoning behind that. I did want to get some CBA sub 60. Again, just didn't have time to put the trade on yesterday. Or 2 days ago, sorry. And then what was the other one that I bought? Now I'm forgetting. There was a third one that I bought on that day. Westpac, Santos, and I forget. What was it?
Did you go for BHP?
BHP, that's right, yes.
I'm glad I can remember for you.
Yeah, thanks. Thanks.
Yeah, that's right. I'm still sitting there. So at the moment, my view is I'll probably operate in the unlisted market for the main period of time. So so the private equity team and I are looking at lots of different opportunities for businesses that we can buy off market, and at the moment we're doing a lot of investigation around in the tourism and leisure area. So we're looking at restaurant groups, some breweries, and some hotels and a bunch of other assets. And I think what we'll probably do, although I'm not saying the market can't go for a good strong run up at some point in time, maybe just not yet, we'll probably operate in that area because the people are finding it very difficult to access finance, and just the way that the market is set up around that, it wasn't great before this all went down. It's horrific now. So that's probably most of my stuff. But I do have some smaller cap stuff, and I'll probably end up buying, in on the index when I'm ready to go, and then have some sort of a couple of companies that I've got deep knowledge and maybe some involvement in that I buy, directly into. That's generally how I manage things because I'm never really prepared to do the heavy lifting research to have an opinion about whether I should own BHP or Rio or ANZ or CBA or whatever. I just can't.
That's why the stocks that I picked were. It was the decision to go on and buy some stocks that morning was based on a very basic principle of I literally looked at the trading scans to see all the blue chips. Did a quick calculation. I reckon my decision-making process was about 10 minutes. I mean, I could not care less about Westpac's and BHP's business models, right? Just honestly, I've got zero care for it or time. So, and it was, plus it was a self-managed super fund investment. I'm buying it, and I might, depending on, I don't even know what my mandate says, but maybe sell some of it out if I can, or hold it for however long I can. But I mean, of course, in terms of my personal, I haven't got a single stock, listed stock in my name. I've got plenty of unlisted.
I've got to bump out. I've got to bump out of this session. I've just got a call with New York. We're finishing a deal up there at the moment.
Unfortunately, as soon as you bump out, I'll be gone as well because we don't have a.
I'll just mute it. I'll mute it if you want to keep going. But we'll be hopefully reading about this one in the newspaper in a week or two. What was I going to say? Yeah, look. So thanks for everyone coming along, and we always appreciate you taking the time. For anyone that's new and coming on, if you want to get a trial of our platform, just type in yes. For all those that come in every week, thank you for coming and good luck with your trading. There's a lot going on out there. We haven't looked at stock specific this week, just the XJO. That's what we've been trading and we'll probably continue to trade. And we had a good session with Nathan Germain, who was on last night, did a great presentation. It'd be worth listening to what he had to say about the market. So that recording will be up in the newsletter tomorrow. And we were going to each week, Ivan, we were sort of halfway through talking about this, but invite in a presenter, and so sort of once a week run a session. We might actually take turns in hosting because it was hard with 3 people online, where we get a trader in of note and just ask them questions. It could be you privately trading out there on this session today, and just ask you questions about how you're trading, what challenges you're having, what sort of strategies you're using, what you see and how you're approaching things overall, and then invite people in to ask questions and have a broader conversation. So I really like that session last night. It was very much suited to people that were traders. So like someone bumping off from general public, there were a few people that came in and they were scratching their head at what we were talking about. But I think for us options traders, really, really valuable. So we'll get that in and sort of once a week or once every 2 weeks get someone in. And it could be just Brian from the ASX or a funds manager, but really I think the most interesting people to talk to are people like us. Well, when I say us, you guys, us that sit there and trade our own accounts and have our opinion about how things goes. So get on there. If you're again, platform, type in yes. And otherwise, good luck with your trades. It'll be interesting to see what happens. A week is a long time at the moment. Yeah. So we'll see you back next Thursday. Thanks, guys. Thanks, Ivan.
Perfect. Thanks, guys.